It usually takes a few days, 2 to 3 days. On the third day, I'm like, all right, you made this mistake twice in a row. Just stop doing this.
Welcome back, everybody, to Be the Trader. Today, I have a very special episode. I'm here with Krishna Joshi from 7 Points Capital. He was so kind to invite me into their office here in Fort Lauderdale, Florida. So if you don't know who Krishna is, and you're just like, who's that? Well, first off, you need to go back and watch the previous episodes. He's been on the show a couple of times when we were virtual. And he's talked about his journey and also really dove deep into certain topics before. And a lot of people love that episode, so make sure to go watch those as well. But again, here's Krishna Joshi, and man, my friend, welcome back to the show, man.
Pleasure to be here, Alex. It's always been fun talking to you, and now meeting you in person for the first time.
It's nuts. I feel like it's just crazy when we finally meet. It's like we kind of already know each other.
That is true. That's how it felt. It didn't feel like, oh, I haven't met him. I don't know how it's going. It's super fun. And with you, the show, congrats on the show.
Thanks,
it's been fantastic. It's been growing. And a lot of guys out there are benefiting from this. So I would say keep up the good work, honestly.
Thanks, man. I appreciate it. Well, look, I know a lot of people are going to want to know, like, just how things have been for you.
Right.
So I'm very curious. We're in 2022. It's January.
Right.
How have things been for you? Like, it's been like a year since we've kind of talked.
That's true. The markets have been definitely tricky since, I want to say, February. Last week of February, that's when things started really turning around of 2021. And since then, it's been a lot of months have been like really good, easy months. And then we've had months where it's just whatever you do, absolutely, you take an A+ setup and comes right back up. You're like, that used to be an A+ setup for me. What happened? And so markets have changed. Some setups that used to work flawlessly, they don't work anymore. Like some you just throw out the window.
Man, yeah.
And some A+ setups are now A-, which is fine. So, but having done this for the past 8 years, I'm not saying it's easy to adjust in this market, but I'm saying that the only path forward is adapting to the markets.
Yeah.
And what that really does is just brainstorming session. It's like, all right, this is not working. Just keep it on the back burner. This is working. All right, let me focus on that. So it's been a lot of just
like adapting,
adjusting,
things out.
like recalibrating what you're good at, what you're not, and just taking one day at a time.
When you say adapting, because I know people who are especially maybe their first year, maybe first 2 years, right? And they have a setup, and how do you distinguish, and how long does it take you to kind of figure out, like, this setup is no longer an A+, it's an A-, or this just doesn't even work anymore?
I want to say the biggest change was from the 4th week in February 2021 to 15 days in March. So those were 3 weeks that actually took me, like, I took a couple of punches in the face to realize, all right, wake up call. 3 weeks, this hasn't worked. But then again, you're coming off of the 3 best months I've had, December 2020, January, February, incredible amount of opportunities. You're trading 4 a.m. to 8 p.m. You couldn't, there's so many stocks that you were missing because you could only trade certain amount of stocks. So back then it took me about 3 weeks to realize, hey, this is not working. Stop trying to force trades and kind of adapt and adjust to it. But now, since a few things changed lately, it usually takes a few days, 2 to 3 days. On the third day, I'm like, all right, you made this mistake twice in a row. Just stop doing this.
Hey, we wouldn't be able to do these face-to-face interviews if it wasn't for our sponsor, Cobra Trading. So if you can just give them a few seconds of your time, we'd really appreciate it. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show.
Or size down in this setup. But even after doing it for 8 years, or like been trading since 2006, if you take into consideration the Indian markets, even after 15 years, I think it takes a while, and sometimes I need Mike Katz or Mike Manjari to go and say, hey, slow down, this is not working for you. You're risking way too much on a setup, which is not there, risking way too much on one symbol, which doesn't make sense. So it's sometimes at the end of the day, it's a collective team effort.
I love that you said that, because like you're surrounded by a lot of traders.
Yes.
And so you kind of get feedback from each other.
Right.
And it kind of helps you kind of like pump the brakes. And maybe you might know, hey, this is my best setup. But then someone else is like, yo, like this is not working as much.
Yeah.
You might want to recalibrate or reestablish how you approach this.
Yeah.
Whenever you decide that this setup, I need to kind of put it on the back burner for now.
Right.
Do you say like I'm going to give it a month and come back and look at it, or are you always looking at it to kind of see if it comes back? Like how do you keep an eye on it, or are you keeping an eye on it?
Always looking at it. I know a lot of people have like a negative feeling about paper trading, but it's not really paper trading. I'm not like taking that setups. But if you have 5, 6, 7 setups and only 2 are working, but you're constantly watching these 3 setups. And when it works, so you're saying, this is where I would have bought, this goes to be my stop. So let's take today's example, BBIG, a decent setup, and just comes back, makes new high of day. So that's something that I'm laughing, I'm just smiling about. I'm like, good thing I didn't take that setup, because you kind of see it coming.
Yeah.
But had it faded all day from that A plus setup, which was an A plus few weeks back, if it keeps fading, then I'm taking note of that mental note, like, hey, keep an eye out on these setups. It's working. And then the next time it presents, maybe I'll go in with 25% size. So that's one of the things that I've done. Either 0 size or 25%. I'm not putting insignificant amount of size, because then you don't tend to take it seriously. But at the same time, I take paper trading seriously, like when I'm taking that mental note.
Yeah, and I love that you said that, like you brought up the idea of paper trading, because I know I didn't bring this up to you, but I'll tell you right now that what really helped me personally is I knew what I was really good at, and then I started paper trading instead of trading my real account with like mediocre setups that I'm trying to get good at.
Right.
I just started paper trading them.
Okay.
And I really find a huge consistency on just my main setup and just putting real money behind that as I get better here on paper trading. And then when I saw this one setup getting better, I put it into the real account.
Yeah.
So I love that you said that, because it just shows that no matter where you're at in your career, don't discredit like watching something and imagining the trade or making a plan because you're not putting money behind it, because you could be doing yourself a disservice.
Yeah, absolutely. I mean, it doesn't make sense to completely discard a setup, but at the same time, why put money behind it if it isn't really working?
Absolutely. Now I'm very curious on, a lot of people have been saying, and I just want to hear your opinion on this, that the markets, when they're changing, and in this case, people are saying like the volume's not as high. Does that bother you in any way, or does that make you kind of like adjust your trading style in some way?
You're definitely adjusting, like we mentioned, that if this is not working, you're definitely adjusting. You're adjusting size. My lockout's down a lot. It's close to, I think, 33% of where it was.
Okay.
My position sizing is down, obviously 33%, but the number of symbols I used to trade, that's down as well. I didn't have to, like, if you think of the numbers, if you just drop your risk per trade and you drop your lockout by the same amount, you could still technically be trading the same number of symbols.
Right.
But I've kind of dropped that as well to kind of do less. And if things pick up when you want to start doing more, it's so easy. It's just like a flick of a switch and you're like, all right, things are moving. How much can I handle? How many more setups can I take? So then it's really about how well you can really get back into the 5th gear again.
And I like that you just said that the idea of like you downsize and your number of setups kind of decreased a little bit as well. But not too long ago, you had like the best couple of months, right? That are just killing it. But some traders are thinking, who had a good couple of months, that they immediately got way better at trading. Right? And then so they don't stop. They just keep pushing. Can you explain how like you can have a killer year, or like, because you've been trading for 8 years here and then longer outside of this market, right? And so with that being said, you probably had like a year where it was okay, and then another year was just monster, and then the next year it was better than the first, but not better than the second. can you explain how like you need to make sure that you keep your head on the right level
Yeah.
and not be like, I'm just a rock star trader,
Yeah.
way better than I was just 3 days ago?
Yeah. So I've, like you said, having done it 8 years,
Yeah.
there are at least 8 ups and downs in that. So what happens is whenever the market cycle changes, the first time I really started feeling comfortable trading and being profitable and then trying to push size was when I had my first $1,000 day. So this was back in 2014. That's when I was like, all right, this feels good, this feels comfortable. And that's when I thought, I think I figured it out. Like that's when I was like, all right, it's easy. You can make $1,000 a day.
Yeah.
That's 250,000. Fantastic. $250,000, not bad. But that was Thanksgiving 2014. And then after that, when markets were easy, oil was tanking from $80 to $30. So everything was much easier. What I was trading.
Yeah.
And then there were like 6 months of absolutely tough months until Brexit happened. So when Brexit happened again, 2015, June, July, August, fantastic months. And then again, all the way to 2016 elections, it was really slow for me. So at this point, when I look back my 8 years of performance, it's always been market cycles. It has always been 3 good months, 4 good months, and 8 slower months.
Yep.
Where you have strategies, something like market making strategies for me, which was consistently making X amount of money every day. So knowing that it's always been like that, it's never been killing it 12 months. So now that when things slow down, I'm not doing two things. I'm not constantly pushing in March.
Right.
After 3 weeks, I realized, all right, time to slow down, time to not give back percentage of gains. And even if you think about the percentage, if you make X amount, when you start giving back, it's only a small percentage of that. And that's one of the advantages of being at a prop firm where you are able to control what that percentage is. So out of those 3x that you make on 3 fantastic months, you don't want to give back more than 5% sometimes. So that number is really small that it doesn't really start bothering you. Imagine you grow your $100,000 account to $1 million.
Right.
And next month you just, once things stop working, you're down to $500,000. So you literally gave back half your account, or you have massive drawdown days. That's something that you can avoid here. Being part of a prop firm, having those max daily set limits. Second thing, what it does is it gives you confidence that the next time market picks up again, you've been able to do it 6, 7, 8 times in the past. You will be able to do it again if the market is right.
Right.
And what actually happened during these months, June was really good, May wasn't good, June was good, and then it's been 2 good months, 1 okay month and 1 bad month. 2 good months, 1 okay and bad. So the last 8 months have been like that. So knowing that what the trend is, it kind of tells you that no need to push unless you have fantastic A+ setups, which I don't have personally for me right now. It doesn't make sense to push that. But again, don't self-doubt that can I do this? Do I know how to trade anymore? What just happened? You obviously have those days when you have when you're max locked out on the day. But that again, it comes down to just believe in yourself. You know, when people write on Twitter like don't give up.
Yeah.
But this is what it means for me when don't give up, meaning my goal is that this is a marathon. It's not a sprint. Just survive the next 8 months. You'll have 4 decent months. Survive the next 12 months. You'll have maybe 2 good months. And to be honest, those 2-3 months make the entire year. So why push it 12 months of the year?
And I love it. If it's interesting, it's just the idea of like, it's not what you make, it's what you keep.
Yes.
Right.
Yes.
And the fact that you're saying that sometimes like 2 months that make your year, or sometimes you have 2 good months and a lull, maybe okay, and then maybe a bad month, and then 2 more good months.
Yeah.
It just shows that someone may be listening to this and they might have just a great month just last month and they're just struggling right now. So now they get in their own head, right? And they're just self-doubt.
Yeah.
They're maybe compiling and sizing up more. But instead, you're saying you'll end up downsizing, and you're already at a level where people probably think, oh, this guy's never downsizing. This guy's just killing it every single day.
Yeah.
And I just respect you so much for just saying that, because it's going to help a lot of people out there who need to, they might feel it. They might feel it like, oh, I should probably downsize right now. But the ego really prevents people from doing that. Is there anything that you guys do here at 7 Points when you're like helping new traders out? Because I know you got a new team, right?
Yes.
You're always helping people.
Yeah.
When they are going through, like they just had a killer month, right? And then they go through a rough patch.
Right.
you just reduce their size, or y'all like talk with, like, is there anything you do besides that helps them kind of get focused and be like, hey, like, you know, I'm going to struggle this month.
Right.
Is there anything you do to help them go through those months?
Right. I feel how I believe I can help a trader the best way is knowing how he trades. Right. So for example, we have put together a really nice team, young traders. They have a few years of trading experience under their belt. And the way I try to help each one of them out is like a customized approach to them. So if, for example, trader A, this is his strength, let's help him how he can grow that. There's another trader who has fantastic risk management, but he cannot size up. There's trader C who has amazing setups, but he gives back a lot. So it's just working with each one of them in a way that this is what works for you. This is what I would suggest you do. So I was talking to this one trader. He says, I end up missing trades and I just cannot capture bigger moves. Like he'll call out a trade in the room and he won't be in it. And everyone else, like half the other guys are in. And we'd be like, hey, nice call. And he's like, I missed it. So I told him, make a journal of trades that you take, that you don't take. Look at the performance, how the trade would have done as if you took the trade. So just kind of like going back retrospectively trading it. And then that way he starts trusting his setups more. Because I was asking, what's the problem? Do you not want to put on enough risk? Is it too scary to put on a trade? What is it? So he's like, no, it's just like I don't trust the setup. So I'm like, make a list of all the trades that you didn't take and see if you can find a common pattern and go back and start trusting it. So I'm not saying he's taking 100% of them.
Right.
He's maybe taking 25%, but that's 25% more trades than he was taking before. So my approach of helping each one of these 6 guys that we have right now is just individual, customized approach towards him. For some, it's like trade less, trade a few selective setups. For someone else, it's like take on more setups. It's amazing setups. Just take them.
It's interesting how like everyone has their own challenges. Everyone is unique in their own way, and they all trade different. Because I remember we talked kind of off camera, and sure, you're all trading in a room together, but you guys all trade different. And that's so unique in trading, whereas so many people are trying to copy each other and just be exactly who that other trader. Like, oh, I know Krishna, so I'm going to do exactly what he's doing. But I'm pretty sure, and you correct me if I'm wrong, but like probably no one in the firm trades exactly like you, right?
No.
Everyone trades different.
Absolutely. Everyone trades different. Even if you call out a setup and say, hey, each one has to get in now. It's a rule. Everyone buy this. Let's say, hypothetically. Everyone will get out at different spots because either it's not their setup or their risk management is different, their stop loss is different, time frame is different. So each one has to trade it differently unless it's a process, it's the setup that you co-develop as a team and you're saying, all right, this is a setup we want to work on. That's something that we've encouraged. It's a more collaborative team that we have now than ever before, where these guys are working with each other, teaming up with all of them, with each other. So it's not like A works with B and only A and B work together. Like A works with B, but he also has a setup he's working on with the other guy. So they're kind of meeting outside work. We go for happy hours, everyone's discussing. A couple of things are thrown around in the room and they're like, hey, I'm going to work on this. Is anyone else interested? And it's easy to kind of pair up that way. So it's not really like a forced pairing up. It's like by choice. You kind of pair up with someone because you're interested in exploiting that. That
makes sense. It's like that collaboration. You're collaborating with someone that you kind of already have a feel for that kind of setup. Like you kind of seen it before. I like that. Let's partner together. So speaking about that, because a lot of people can be, I preach in the past and I'm wrong a lot too. So I know that I used to be against like collaborating with people, right? I used to think that because it would impact me personally. That's probably why I said that. But I know you guys collaborate, and I know a lot of other traders collaborate, and it helps them a lot. How do you collaborate without letting it influence you in the negative way? Like without it influence you in changing who you are as a trader?
I would say if you think that the strategy is not scalable at all, and only it can handle certain size, that's when you start feeling that if 5 people do this strategy, there's just not enough meat on the bone for this. But if you think that the strategy is scalable, and the idea is obviously to trade scalable strategies, then that's when you start thinking that there's no way this can impact me negatively. So if you know, let's say I'm short something, and if I tell you that, hey, if I'm short here versus this because I feel X and so reason.
Yep.
If I think that now Alex being short as well is going to negatively impact me, that's the only time I won't want to collaborate with you in any way.
Right.
So as long as you think the strategy is scalable, as long as you think that there are few parameters that I'm good at, there are few things that he's good at, this will complete a strategy. That's when you really want to collaborate. It's more productive than affecting it in a negative way. So I feel most collaborations will work in a positive way unless the strategy is absolutely not scalable.
Gotcha. And you know, one thing that comes to mind that I have to ask you is, when you're helping all these traders,
Right.
Is there something that, because most of them have experience already, you know,
Right.
as you mentioned, like 2 years,
Yeah.
maybe a couple of years under their belt.
Yeah.
They have something that works for them, and you're there to help them grow.
Yeah.
Is there something that typically holds is there a common thread that most struggle with to grow? Like whether it's size, whether it's additional setups, whether it's risk management, is there a specific area that's common?
That's all three of them. I was literally gonna say all those three of them. Some struggle with size, some struggle with risk management, and some struggle with additional setups. The problem is someone's only worked on one setup all his life. That's his strength. It's harder for him to make money when the market changes. So he needs additional setups like plan B, plan C. So that's when he really needs more strategies under your belt. And just having traded like anything and everything over these 8 years, I know one thing you need to do is have a lot of strategies under your belt. And so there was a brief period where FINRA/SEC had a tick pilot program. There was a test program. They implemented it and they made a penny spread was 5 pennies, like a nickel spread.
Oh yeah, I know. Okay, yeah.
So that was a period where a lot of people were hesitant to try and test that. But I was on top of that, buying and selling left and right to a point where we were a certain significant percentage of daily volume and we had to actually slow down. I remember Mike Manjari mentioning, he's like, just slow down. You are a big percentage of the stock's daily volume. You really have to slow down, only hit certain setups or certain trades a day. But there was only a couple of us in the room doing that because a lot of people were like, I don't see the edge in it. I don't want to try it. Whereas a few of us who were doing it were able to do it kind of successfully in a way that you only know if there's an edge or not if you try it. If you don't try it, forget. You don't even know about what tick pilot is probably. But for us, when tick pilot got taken away, I was like, oh my God, that's one of my strategies absolutely taken away from me. But while it lasted, it was super fun.
You know, I'm very curious for yourself for 2022. I need to ask this question. Is there anything that you personally are working on for yourself? Like maybe something you want to improve on or maybe something that you're personally struggling with that you want to overcome?
Yeah. I think one of my goals is more automation and I'm spending a lot more time back testing. I've been updating my scanners more frequently than I used to. So it's tweaking a little bit without really overfitting. Sometimes you can see a setup and then you try to exactly replicate that and say that I just want to find this setup. So what I'm trying to do is create like a general template and say whatever fits this criteria loosely, I want to know all those setups. So I've been playing around with scanners, I've been backtesting a lot, and automation. So those are 3 goals. Since it's January and since I recently kind of made a note of it, it's fresh in my head. So there it is.
When it comes to backtesting, because there's a lot of new people, and I know I get a lot of DMs about this, and I personally didn't really do backtesting. Personally, I kind of like just traded and documented everything and tracked it all. And that was kind of like my forward testing, if you will. Don't recommend it because it took a long time. But I'm curious, like, can you give advice on how someone who's new, who knows no idea, like how to go about backtesting?
I would say easily find a setup in which you think there might potentially be an edge. Right? So if you're trading one strategy, but you have something which can potentially be a good edge. So write it down, make criteria. So I use TC2000 pretty actively. It's a really good, you don't even need a subscription for that. You could use like a free version. Put down those criteria. So for me, example, it'll be price between this range, volume, average volume greater than this, market cap greater than this. Right. So now I've narrowed down the whole universe of 8,000 shares into maybe few hundred. And what I do is when you scan, you can say the condition is met now, or you can go back X amount of bars. So if I'm looking at a daily, I can say, not just now, but I want to see these scanners meet this criteria, let's say in the last 30 days. So I say, met the criteria within the last 30 bars. And there you go. If you're looking at a daily, you have 30 days, you have all the stocks that hit the scanner in the past 30 days. So then you're quickly back testing, you're quickly running numbers. But at the same time, the data collection that I used to do is much higher than before. So I'm writing a lot more intraday. I've been doing it for the last 6 months. Since July, August, it's been really helping, where instead of jumping from one setup and then scanning for the next one and be like, all right, another position. Now I'm taking it easy to a point where I'm taking notes and not worrying about getting in for 1 or 2 cents. If I miss it by 2 cents, it's fine. If I'm really actually thinking about potentially making 20 cents on the trade,
right?
Why worry about missing 2 cents on that trade or this trade or the next one, where there's still 18 cents left on the table. So if the trade really works, just still put it on, because you've tested that the setup works.
You know, when it comes to what you just said, is like, if you know that there's enough meat on the bone, like, don't be so specific on, like, if you miss it by, a couple of pennies here and there. How do you balance that thought process and chasing? Like, because some people might hear this and they're gonna be like, you know what, there's 15 cents on this move, and I'm gonna only risk, I was trying to risk 1, right?
Yeah.
But I'm gonna have to risk 5 now, because there's also idea that no one's perfect, right? Like, there might be 15 cents there.
Yeah.
But you might only get, 5 or 10, because no one executes, to a T, and not every play goes exactly the whole range, right? Can you explain that?
Yeah. So one thing that really helps is backtesting, where potentially what's the risk reward on the trade. So if you're risking X and you think you can make 2X every time, so if you're risking 25 cents to make 50, you know that you missed it by 5 cents, but there's still 45 left on the table. So firstly, that backtest data collection helps you. The other analogy that helped me was my personal experience playing sports, where I used to play a lot of tennis a few years back. And what I always used to do was the return of the serve, I would try to keep it as deep as possible, right? And in order to do that, I would hit a lot of outs on the return. And a few of the players I used to play with, they said, hey, instead of really going for that, get in a safer return, keep the ball in play. And you don't have to execute it perfectly to the tee. It has to be, if the ball is in play, you just play the numbers, play the odds. If you hit an out, that's it, you lost the point. If you keep it in play, maybe he messes it up and you get a point. But as long as the ball is alive, you still have an edge. You still have the game is on. So that's what I was trying here, where as I don't have to perfectly execute to the tee. I won't buy the bottom, I won't sell the top. As long as there's meat on the bone, as long as there's something I can capitalize out of it, you still take it.
I'm glad that you said that, because it's like you went back to what we talked about, is like backtesting. Like, if you know that this strategy can return, 3x, right, or 3R, and you're going to risk 1R and you only move like a little bit, then you can take it, right? But if you don't know that, then you're taking a huge risk. Like, you might be chasing this thing, you might be setting yourself up for a huge frustrating day.
Yeah, absolutely. I mean, it just helps knowing, just being able to categorize a trade and call it, this is the trade where it's break the VWAP, keep a stop above high of day. If you are able to give it a name, if you know all the parameters of the trade, and when that trade actually presents, you know what a potential payout could be, that's when you know that, fine, I missed it by 3 cents, I was watching something else, but I still have so much move to go on the day.
Now, this is kind of off base here, but I'm just very curious. So 2020 and 2021 were just really nuts, right? And you've been training much longer than me, so would you agree they were pretty, like, just bizarre?
Wild, absolutely wild, yeah.
Do you think, because I know people are wondering, like, is that ever going to come back, or is that, just your opinion, because I know no one knows. No one knows. Like, none of us know. Like, we don't know what's going to happen.
Yeah.
But do you think, like, that kind of changed the market to where it will come back like that, or do you think that was just such an anomaly that it could be a long time?
It always kind of comes back. Sometimes it comes back in short spurts, where what happens is you have earnings season where the analyst estimates are so high that even if the company is meeting that, are not really able to beat it by a lot. So you see amazing earnings. What happened? Why is the stock down 20%, 30%? It's a tech stock.
Right.
Revenue guidance is flat and the stock's down 20, 30%. So that happens in small forms all the time.
Yeah.
And sometimes these big moves happen, which is around elections. Brexit was a big event. COVID was a huge event. So during that, we saw wave 2, wave 3 as a pandemic like that got extended. The way the market reacted to it also got extended. But this will come back. Whether it'll be every 6 months, every 12 months, that's the uncertainty. But does it come back? It always comes back.
Gotcha. And when you brought up, like, every time there was something that happened, there was usually some kind of news event behind
Big events,
it, right?
Yeah.
Does news play a huge part in your trading? Like, are you constantly wanting to know the news before you make a trade? Is that a big part of your own trading?
Definitely. I think the idea is to incorporate the news. If you're trading a biotech stock, you want to know the catalyst. If you're trading earnings, you want to know how good or bad they did. If it's an M&A takeout, whether there's a rumor, short report, whatever the catalyst be, you're saying, I want to make sure I know all the information about it.
Right.
And then I'll still trade my setup. I'll still trade for 2 hours, 3 hours, 4 hours. You'll still play the numbers.
Right.
But after I have all the information. There are times when a short report quickly hits. If it's a certain company who comes out with a short report or the other one, you know their performance. When A comes out with a short report, you know how much they pay off. And if B comes out, you know how much the stock usually dips. If you don't know that, then you're not really going straight off of that. But you're like, all right, if they're short XYZ stock, I know that it's a significant report. I know that they have done significant amount of research on it. They'd be writing articles and threads for a few days. They'll have follow-up. They'll ask answers from the management. So now you kind of know that, all right, this company does kind of a decent amount of research. It's not just like, we don't like it, overpriced, I'm short. No, that doesn't really happen. That's what analyst upgrade, downgrade does. When you're talking about a short report, when that comes out, sometimes you quickly act on it and put a stop based on your setup, based on your risk limits. And then sometimes you process the information as it happens. But it's not that I just blindly put on the trade. You kind of know what's the payout when company A comes out with a short report versus B.
Right. I love that you said that, because when you said that, of course you look at all the news.
Yeah.
And I'm going to start looking at it a lot more now, because it just shows that I'm a technical trader.
Right.
And I'm thinking, like, I don't look at news because, and I have a question for you. We're about to wrap this up, but I want to ask these last two questions. I need to ask these because you brought this up and it's really intriguing to me. Right. Because the challenge is, if you're a technical trader and your technicals tell you this is a short, but then there's like positive news, what do you give way to? Because, like, I know for me, I know what I do, but I know a lot of people out there are going to be like, well, I'm conflicted. Yeah. Maybe I'll use less size, and then I should have used more. Like, any advice around that? Like, especially when they're new and they're starting to look at news and they're like, well, this is telling me short, but this is really positive. Yeah. How do you balance that?
I think that's where the tape reading skills come in handy for someone like us. I come from a market making background. 2014, you'd sit on the tape all day watching level 2 move, right? So seeing how the time and sales and the level 2 react to it, you kind of have an understanding of how heavy the seller is, how heavy the buyer is. If it takes out a certain, let's say this is the channel, if it breaks out of the channel, is it a bunch of stops getting triggered and then it just has a spike, goes into limit up or limit down, or is it's going to be gradual grind up? So you have kind of an indication of how bad the news will be. Like, when sometimes these stocks straight off the open start hitting limit up, and there are stocks which gradually grind up all day. So kind of you always have a rough idea as to what kind of a trade you're involved in. Is it a low float? Is it a medium float? Is it like a super high 100 million plus float? it's going to trade thick, it's not going to go limit straight up. So that's one thing that you know back of your mind.
Right.
I think that really helps, just knowing, coming from that market making background. So the idea again is you're combining, you read the news catalyst, you incorporating those fundamentals into that technical read. You're incorporating those tape reading skills into this. So it's not, for me, it's not just fundamentals, it's not technicals, it's not market making, it's the three of them together.
So if you see like a good technical setup for yourself, and you like, man, I gotta play this, and then the news is kind of conflicting it. Will that influence your decision on like sizing or something like that?
Absolutely. Okay. It will influence my sizing. It will influence how quickly do I get out of that trade if I'm wrong. Am I going to risk high of day, or especially if it's had a wide range, am I risking all the way up to high of day, or I'm taking paper cuts on the way? So a lot of these ideas and thoughts go into how you decide on the sizing, how you decide on risk management. You do have like a general template saying I risk X amount of dollars on most trades, on 90% of the trades. And then you have these anomalies. If it's a phase 3, it's different. If it's a FDA approval, it's different. If it's something unexpected, it is different. So you still have a general template that applies to most of the trades. And then you have these anomaly trades that you'd be like, all right, special situation, treat it special.
Look, Krishna, I really appreciate your time today. And before we wrap this up, if you'd like to let anyone know how they can learn more about you, maybe they're curious, maybe they want to like, man, you've been with 7 points. What is 7 points? Can I get more information? Can you let them know real quick how they can find that out?
Yeah, absolutely. I'm not very active on Twitter, but my Twitter handle is KRIS23JOSHI. That's Chris23 Joshi. I try to respond to as many DMs as I can. I try to respond to any questions that are thrown away. But hey, find our website. The information is there. If you feel like applying to prop, feel free to do that. When you apply, tell us what you're doing, why you're applying, how 7 points can help you. And if anything, just if you want to have a regular just a Skype call or something, just feel free. We can always do that. I've done it in the past, and I was telling Alex how I want to do that more. Just talk to people one-on-one on Skype, just a normal conversation, not so much about trading and trades and executions. But I'm here. Feel free to reach out. And thanks, Alex, for having me on the show.
Hey, man, thank you so much for giving me the time and letting everyone hear more about the knowledge that you have, because I know it's going to help so many people. And at the end of the day, everyone, make sure to check them out. Check out 7 points. And again, thanks so much, Krishna.
Thanks, Eyal.
Here we go.